Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, all 10 of the CBAM portfolios outperformed their respective benchmarks in a relatively risk-off week where we saw the strongest performance coming from CBAM portfolio number 1, recording 0.07%, down to CBAM 5v2, recording minus 1.45%. In terms of top performers on a one-week basis, we did see some rebound there in the performance of our Hypnosis Songs Trust position, up 3.7% on the week, and that was on the back of news breaking that the fund would be going through a share buyback program lasting until the 8th of December in order to bolster that share price that had fallen to less than half of the net asset value of its music catalog, and that was a concern from the CFO there, leading to that share buyback. But we had seen a stronger sell-off from that Hypnosis Songs Fund over the past couple of weeks on the basis that the fund hadn't bought a new catalog in almost over a year and revenue was beginning to slow from existing catalogs. In terms of top performers, you also see UK assets there falling back into favor with the market on the back of that switch out of the Chancellor and bringing in Mr. Hunt, who quickly undid some of the trustonomics in terms of the tax cuts and the unfunded sort of energy bill that was meant to last 2 years, now being cut down to 6 months, and that was viewed as a net positive for the UK markets. And that would see strong performance from both all-stock gilts and sterling corporate bonds, up more than 1.82% on the week. In terms of detractors from performance, we did see that headwind there for 91 Global Gold, in an environment where CPI figures keep on coming in hot, be it in the UK recording 10.1%, the US 8.2%, or the Eurozone looking at 9.9%. And obviously that just really aligns central banker rhetoric towards a rising interest rate environment. In there, that would see that non-interest earning asset gold seeing headwinds down minus 6.88% on the week. We also continue to see some headwinds, which I'll touch on earlier, for China, and some headwinds there for Japan as well, down more than 6.27% on the week. On a quarter-to-date basis, coming into Q4, obviously just 20 days now, you would see that performance has ranged from CBAM portfolio number 5, returning minus 0.38%, down to portfolio number 1, V2, returning minus 1.07%. We did see some performance there, strong performance from the US markets on the back of stronger than expected earnings, and that would see the S&P position with the hedge up 2.27%, and most notably again on a quarter-to-date basis, sterling strengthening by 2.34% versus the US dollar, and some recovery there on faith being restored in the UK markets. We did see that strong performance on the same breath for the UK FTSE 250, and also that just that LNG short-dated sterling corporate bonds, both up more than 1.1% on a quarter to date. We saw some headwinds there in terms of detractors from performance from our clean energy positions, which had been a stronger position, strong performing position in the first 3 quarters as concerns really began to seep into the market with regards to demand for crude oil, and naturally that would see some price pressures for crude oil coming down from those highs that were above 120 earlier in the year, and naturally clean energy moving in tandem as the obvious alternative rather, and that would see that pullback of 9% for iShares Global Clean Energy. Then in terms of China, we have been discussing this over the past couple of weeks, and we are watching quite eagerly developments at the Chinese Communist Party Congress, which started on Sunday, but that would see also HSBC China down minus 6.80%, and Columbia Threadneedle down to 7.04%, despite news coming out of the Congress that there will be no immediate loosening of that zero-tolerance COVID policy, no loosening immediately of that zero-tolerance COVID policy lockdown sort of mandate, and also no mention of the property market woes that we've been seeing. But there has been some encouraging signs there in terms of development in the sort of Chinese tech market, which had seen headwinds from that online gaming, online education crackdown, and that online video gaming crackdown that we saw earlier from the regulator.